Well, good evening and welcome, everybody. Those of you who've been at NYPAY events before may know me. I'm David True. I'm the president of NYPAY. As you know, we do these events about once a month and try to come up with really interesting topics to discuss. And we have one of those topics tonight on core banking in the cloud, to cloud or not to cloud. I think I may have got the name mixed up a little bit, but something along those lines. Just to kick us off, I wanted to welcome you all. I want to thank Davis Wright Tremaine, who is our sponsor that makes these things happen. And I also had a couple of housekeeping elements. I mean, the main one is that as we get into this event, please turn off your camera and microphone so we can have the focus on the panelist and the moderator as we get going. And as a heads up, there will be the event that will proceed for 50 minutes or so, then some Q&A, and that will be followed by some breakout sessions. You get a chance to speak with people whom you may not have been able to speak to or ask questions of during the event. But with that, we've got a lot to cover tonight and a fantastic panel. So I'll turn this over to my colleague, Ron Mazursky.
Thanks a lot, David, and welcome everybody. Appreciate you attending this event this evening, at least evening in New York. I'm Ron Mazursky. I'm the founder and board member of NYPAY and also managing director of PayGility Advisors. I am moderating today's NYPAY event, and it's called, just for clarity's sake, Core Banking Transformation to Cloud or Not to Cloud. We thought it was a pretty cool name. Based on a member survey we did in the first quarter of 2022, we ended up evaluating a range of different topics that we thought might be of interest to our members, and asked them to prioritize, 1 to 10 or 15, which ones they liked the most. And the topic of core modernization was rated in the hot topics category of our members, things that they wanted to hear. And we decided that we would need to schedule for this year. We'll be doing this survey again next year to find out how things have changed from our members' perspective. Our cores, as we know, are going through continuous upgrades and continuous transformations. And that's why this topic today is so apropos. The agenda, just so everybody knows, covers 2 parts. The first is sort of an introduction of each of our participants, also a panel discussion that we're going to end up going into. That's about an hour between those 2 parts. And then after that, we have a networking session that our members have found to be really worthwhile and engaging, a way for them to meet the panelists face-to-face, but also to meet other members of NYPAY. I'd like to move into now an introduction. We're fortunate to have 3 experts in financial technology that are with us today on this panel. The first is David Foss. Dave is the chairman and CEO of Jack Henry and Associates. We have Ben Maxim, and Ben is the head of innovation at Michigan State University Federal Credit Union. And we also have Robin Smith, who is the head of North America from Mambu. So if you look at the collection of panelists, we have a financial institution providing a perspective. We have a large core that has been in this industry for a while and has great experience. And we also have Mambu, who is a newer player, I should say, in the industry, and known as a cloud core. So with that, what I'd like to do is go over to the panelists for a brief introduction. I've told everybody what your titles are, but can you tell us a little bit about your company? So those of us that are joining that might not know what each of the companies does, you can give a quick intro. Maybe Dave, we can start with you.
Certainly, Ron. Good evening, everybody. Glad to be with you all. So my name is David Foss. I'm board chair and CEO at Jack Henry and Associates. Jack Henry is a 46-year-old financial technology company. So we've been serving financial institutions in the United States for 46 years. We do a lot more than core. So we're known as a core provider, but we have about 300 different solutions, tightly integrated solutions focused on serving community financial institutions in the US. Today, we serve about 8,000 financial institutions, banks, and credit unions. Not all of them certainly are core customers from Jack Henry, but when you look at all the different solutions that we provide, we touch about 8,000 US-based financial institutions today.
That's great. Thank you. Ben, can we have you next do a quick overview of Michigan State University Federal Credit Union?
Yeah, absolutely. So Michigan State University Federal Credit Union is celebrating our 85th year. We were founded in 1937 by a group of faculty members at Michigan State University. Have grown over the past 85 years to include different seg groups, including students, alumni, and then some other large employers along the way. We have 330,000 members, 6.8 billion in assets, and recently formed a couple of years ago a formal innovation center in lab that we call the Lab at MSFCU. That I run and lead up. And then also we recently created in the past year a Reseda Group holding company QSO that also does investment directly in fintech and has 4 QSOs, credit union service organizations that we have in a controlling or majority interest.
Thank you, Ben. I appreciate that. Robin, could you do a quick intro and Mambu?
Sure. So as Ron said, Robin Smith, I'm responsible for the Mambu business here in North America. Mambu is an Amsterdam-based company, a global company with about 230 customers globally. We have about 14 customers here in North America. And we represent a cloud-based thin core banking solution. I've been doing core banking since I was a child. So have sold a company to Fiserv and have spent some time with a few of the other core providers here in the United States. So thank you again for having us, and we look forward to the conversation.
Thank you, Robin. I guess we're just going to kick off on this, the questions. Can I ask anybody who's not on mute to please mute your connection? Thank you. So look, there's been a lot of somebody else, maybe. There's been a lot of change going on and a lot of disruption going on within financial technology over the last several years for sure. I'm going to ask maybe Dave, if you can start with, can you provide a perspective on how the industry has evolved? And then I'm going to ask Robin, who's a newer player in that space, to give his perspective. Dave?
Yeah, certainly. So you asked me that question. Ron knows full well. I've been doing this for 38 years now. I've been in the industry 38 years. Started out as a programmer, writing software for banks, core and other solutions. And so during the course of my career, there have been kind of 3 major milestones as far as I'm concerned when it comes to the technology evolution. If you look back on when I first started, when Jack Henry first started, it was all about automating the back office, the back room of a bank or credit union. We didn't really worry about the consumer, the small business, didn't have any interactions with them. It was all about employees at the bank. Then along comes the internet, 1999, 2000. All the focus for providers like us was about enabling technology online so that a bank or credit union could serve their customers online. We are at this third, as far as I'm concerned, we're at kind of this third milestone today when it comes to technology. And much of that's been driven by the fact that customers, whether they're consumer or a small business customer, or even a large commercial business, they're expecting to be able to do everything using a digital form factor. So a phone or a tablet or whatever, and they expect to be able to do everything.
Somebody just joined. Can you please mute yourself? Thank you.
And so when you look at that change that's happening among, as far as consumer demand is concerned, and certainly it was accelerated by the pandemic, this expectation that I should be able to do everything remote. I don't want to come into the branch, whether it's a consumer interacting with the financial institution, looking at balances or transactions, whether it's a commercial business that's applying for a commercial credit, right? Today, there is an expectation out there that I should be able to do that digitally. I shouldn't have to come to the branch. I shouldn't have to sit down across the table with the friendly loan officer. I should be able to do those things digitally. That's driving a lot of change and a lot of innovation in our industry today. And I'll talk to bankers sometimes, and they'll say, well, for the complex stuff, people still want to sit down across the table and conduct that business. Well, guess what? There's a demographic shift that's happening at the same time now. So who is starting? Who are the people now that are running these businesses? Who are the people now that are inheriting the wealth? It's not the boomers like me. It's the Gen Xers and the Gen Zers, and they do expect to do everything digitally. And if your financial institution isn't prepared to support them in a digital fashion, they'll find somebody who is prepared to do that. And so all of that demand, all of that shift when it comes to demographics, when it comes to the desire of customers and how they want to do business with their financial institution, all of that is fueling this change that's happening when it comes to the technology that we deliver, and certainly all the other companies in our space and what they're looking to deliver.
Thanks, Dave. I appreciate that perspective. Now, Robin, I'm going to go to you and ask you, maybe the follow-on to that is also, so what's going on with this cloud thing? Is that something from a change or disruption perspective that I think you might be able to talk about?
Sure. And I echo what Dave outlined, right, in terms of generationally how things have changed and what the expectations are today from both retail as well as commercial customers or members, you know, as they start to deal with their financial institution. But I think one of the things that's ironic is that, you know, the very first core banking solution that I was involved with was classic early 80s core banking, where we had a DDA system, we had a savings system, we had a time deposit system, and in the old world we called it Showcase, and that was our integrated core banking solution, you know, of all of these individual siloed applications that people then were responsible in their technology environments to integrate and to bring together into a cohesive integrated solution. And if you look at where we've evolved from a technology standpoint, particularly today, it's kind of a back to the future type of scenario where what particularly our types of customers that are talking to us about cloud-based solutions are looking to enable is they're looking to have choice. They're looking to have you know, integration of not just of a provider's solutions, but also then to bring into the ecosystem other types of solutions that, you know, fulfill that broader requirement as Dave described. It's one of the things that I think Jack Henry's done a fantastic job with their Profit Stars work is, you know, basically bringing together a lot of individual assets into an integrated combined solution to be able to provide those 8,000 clients, you know, with more than just core deposits and lending. And I think that's where we're at from a cloud core banking perspective, is we are attempting to create that core foundation, but also then allow our customers the ability to you know, enable their systems through an ecosystem of partners, whether it's solutions that are provided by somebody like Jack Henry or other providers, to meet those demands that today's customers have for richer, greater, more flexible digital solutions. And I think the cloud infrastructure enables that, and the technology that surrounds the cloud enables that. And it's got definitely, you know, ROI and TCO, you know, components to it that allow an institution to start focusing on the customer experience versus building brick and mortar and infrastructure to support the kinds of technologies that they have to provide.
Super. So I think the whole idea of change and disruption right now is opening up maybe another category of questions. And I'm going to turn to Ben and ask you, Ben, what could any of the core banking solutions provide today? And that's any of them, to enable fintech innovation. As a financial institution, what do you look for?
Yeah, no, absolutely. So, you know, caveat, we've been on Scimitar, Jack Henry since 1989, 1990. So we've been with them and grown with them over time. And I think part of the reason that's been successful is because they've been a good job of listening to us. And there's been times when we may not have been the good partner on our side as well, and maybe tried to beat them up a little bit. But I think the times when we've been successful is when we've worked together to achieve new and interesting things. We've tried to volunteer to be a pilot, and then the fact that Jack Henry has offered to us the opportunity to pilot and try new things and explore things, even when they didn't work out, I think being open to that change is really key. I think one thing that I've been talking through with a lot of partners specifically, and you know, think at all levels, there's kind of like this concept of the fintech or startup that kind of really solves one thing really well. And then I think there's some platform players, and I think this is where the cores fit in, that kind of become part of kind of to steal from the data world, like a digital fabric. So they weave in and they touch every point of it. But I don't think that the cores need to be the provider of every single solution to every single need of the credit unions. I think if they try to get into that, then they're going to be too far from their core industry and core vertical, that it's going to make it hard for them to be really successful and listen in the pieces that need to be. Some simple things is, how do you get data in and out? How do you support open banking? You know, we as an institution have gone through the process of doing some direct connections and creating our own APIs, but you know, the core and any core out there, if you can provide that data connection into all these systems, then there's a lot of work that doesn't need to be done client by client. It's just done kind of, again, at that kind of central hub. I think that's a really strong place that Chorus can help enable kind of a lot of these integrations by supporting and promoting open banking, open infrastructure, offering some solutions, but not all solutions. Like I was saying, there are credit unions and financial institutions that can't buy every solution, and they need stuff that plugs in and works well. And of course, I think the core should have, their preferred vendors and the ones that have done the time and effort to make it work well. But each course have to decide what extent do they create their own ecosystem, and really how do they foster that so they don't have to create all the things. Good example is, should a core banking provider create a chatbot, or should they just make sure that all their data flows into that chatbot? So whatever you're trying to do with that really becomes a delivery channel like the web, where you can let someone who does and focuses all their time on that kind of a chatbot technology goes there. So I think that's kind of really the main point, is to make sure they're supporting and really listening to and seeing what is needed out in the industry, and then also providing what comes next as well, to some extent, and trying to look out 10 years, even though they have a lot of clients that probably can't move 10 years into the future overnight. So how do they then support? And I think that's been a challenge for especially the more established players, is they do have a lot of institutions with this technology that, like, we've been on since 1990 and making a mess of it ourselves. So it's really hard to come back and then do some of this innovation, some of it to the fact that we've been able to customize it for so long, and it's time to really almost have a clean break and start over, which is, I think, where you're seeing some of the success from some of the newer cores, because they provide that clean break, but it doesn't necessarily have to be that way.
Hey, Ron.
Yeah, Dave.
Can I jump in and pick up on something that Ben was just talking about, the open connectivity? So just to make sure your listeners are aware, so in February of this year, Jack Henry, we announced a public cloud strategy as far as core is concerned. We're essentially redefining the core. And much of it is around that point that Ben was just making. As we look to the future, we see a world where bankers are going to want to pick and choose what fintechs they want to couple with the technology they get from the core. They're not going to want to buy a core in a box anymore, we don't believe. Now, the established cores, the other established cores are still sticking to that core in a box concept. But at Jack Henry, we've taken this approach now where we're unbundling all the core functions. So if you think about all the different things you do in a core, as we think about it, we came up with a little over 30 kind of distinct functions that you perform. So it's not just loans, deposits, and GL. There are a little over 30 different things. And we're unbundling all those things, rewriting them essentially, putting them as standalone modules on the public cloud. And we're working with all three of the major providers, Google, AWS, and Azure, putting those as standalone components. So now if you want to, if Ben wants to buy, something from a fintech A, and they want to easily plug that into the solution from Jack Henry, that's all sitting on a public cloud layer with a very robust suite of APIs. And we enable that as fully as possible. So we're rewriting the core, but we're putting it on a platform that we already have today, with around 850 different fintechs already integrated into the API layer today. And so this is kind of our view of the future. So I think it lines up exactly with what Ben was describing as what bankers are going to want in the future. The challenge, of course, today is bankers trying to reconcile, I want to be on the public cloud, but my regulators frown on me if I talk about public cloud. They're still trying to reconcile that, but we know that'll get resolved over time. And so that's where we're moving from a strategy point of view. But I wanted to point that out because I think it lines up exactly with what Ben was expressing as the desire for bankers in the future, not necessarily today, but in the future.
Well,
and I was going to say, Ron, backing up what both Ben and Dave had to say, we focus a lot of our activity on fintechs themselves, on that fintech side of the equation. So when we're talking to a fintech like a robo-advisor, which we have a couple of those types of clients, a couple of folks that are clients of ours, like a Robinhood or a Stash, that are robo-advisors, right? They need similar capabilities to what a core banking solution provides in terms of those fundamentals around deposit and lending ledgers, but they also need the ability to interact with and integrate with a variety of different solutions that surround that core, right, in order to enable those robo-advisor type scenarios. Or you take somebody that's looking at trying to launch a crypto offering, right? It's one thing to be multi-currency, and to be 18 decimal points to support Bitcoin, but there's a lot of other things that go into having a full, robust crypto solution. And a lot of banks that are talking to us are talking about how do they enable crypto to even sit beside, their existing core platform, and how do they stand something like that up that allows them to buy, sell, hold, exchange, do the types of things that people want to do with crypto, even though the market doesn't say good things right now about it. So, lots of interesting stuff going on in the fintech space, and I think there is a convergence of fintech and traditional banking, that all of the strategies that you heard Dave talk about, that Ben's enabling, are the kinds of things that people are looking to do.
One thing I just wanted to mention, I did notice, I think 2-3 months ago, I saw something in the news, Dave, about how Banno has now signed an agreement with 4 or 5 different open banking providers in the marketplace, Syntera, Infinicity, and a couple of the
financial data exchanges. So the primary financial data exchange networks, and the reason that's important is because we now, with APIs, in fact, I'll tell you a quick story. I was talking to the CEO of a fintech today, and he was telling me that they had done the integration into Banno, and they had customers live, and they called somebody in our marketing group to say, we'd like to do a press release with you guys. Nobody at Jack Henry had any idea they had done this. And that's exactly what we want. We want that if a banker decides they want to work with this fintech, we want to make it so easy that they can go and do the integration they need to make that bank successful without us ever having to do anything. They don't have to pay us anything, right? They have access to those APIs. But when you do that, if you start moving money between a fintech solution and the core, the Jack Henry core, there's got to be something in the middle that ensures the security of that data exchange, financial data exchange. And so that's why what you're referring to, Ron, was so important. We're the only provider in the industry today that has relationship with all 4 major financial data exchange networks to facilitate just that. So you can move money between different solutions securely, because that technology is proven. So to the example Robin was just giving, we have customers today that host a crypto app. NYDIG is one, but there are several others in our digital banking presentation layer, so that you see it when you pull up digital banking. You see your crypto account. It's not hosted at the bank isn't taking custody of the balance, but because there's so much demand for crypto, you can host the balance on the same presentation layer. You can move money back and forth between your DDA account and your crypto account, but the bank is not taking custody. The bank isn't there's no risk for the bank, but you're helping the customer with that type of transaction that Robin was alluding to. So that's why the financial data exchange network is so important, and those 4 different players are so important to have in the mix as you do this type of stuff.
Right. I'm gonna turn the topic over a little bit to the new core and foreign core banking entrants. They seem to have been struggling with getting some traction in the U.S. market. I'm going to start with Robin and put him on a little bit of the spot there and ask him, so what's going on with the new core and foreign core? Why are they having trouble in the U.S. market?
Well, I got a couple of T-shirts to represent that. Dave knows this, right? I've been playing in that space now for the last 15 years, in working with a couple of different foreign cores that have attempted to come into the North American market, specifically the U.S. market. And I think everybody's attracted to the U.S. market because at the end of the day, like it, hate it, be ambivalent about it, it's the largest financial services market in the world. And so everybody gets enamored by the numbers, right? Whether it's the number of banks, the number of credit unions, everybody looks at that and say, man, if I could just get a small percentage of that, I'd be fat, dumb, and happy, and life would be good. What they underestimate, I think first and foremost, is kind of the convergence and the marriage between the regulatory and the functional type activities that are required to be successful in the U.S. marketplace. You look at around the world, we're still the only economy that uses paper checks, right? You can't get away from it, right? Regardless of people saying the check is going to die and we've gone digital and we've done all that kind of stuff, we still process 90 billion checks a year. So checks are not going away in the U.S. market. You look at things like ACH, you look at, mortgages, right? I love a conversation I have with my colleagues in the UK who talk about being able to support mortgage processing in the UK. Well, they call the loan that you took out at Best Buy for a refrigerator, they call that a loan. They call that a mortgage. Right, which we know mortgage here in the United States is first mortgage conforming. Do you work with Fannie Mae, Freddie Mac? All of the things that go on in the underwriting world, to support a real estate backed mortgage loan in the United States. And so some of that is functional, right? But a lot of that is also regulatory. You look at things like, again, back to check processing, remote deposit capture. I was working with a large foreign owned bank here in the United States when I was doing consulting work with PricewaterhouseCoopers, and they were having tremendous reject rates, on their, remote deposit capture. They were 20% reject rates when the average at the time was less than 2%. And, then you start asking them questions. Well, where was this developed? Well, it was developed in Spain. Well, they don't do checks in Spain. So the fact that they couldn't read a microline, the fact that they'd written their own image capture, right? All of those things are part of our banking ecosystem here in the United States. And so I think regulatory and complexity issues have really impacted their ability to, embrace and to, become a part of the US system. And then you add to that the third piece, and that's just the competitive environment, right? My hats are off to the likes of Dave and Jack Henry, right? Because the top 5, providers in the United States, support 90%, of the bank processing that goes on, right? So you look at the competitive landscape, you look at regulatory, you look at functional, and those to me are the 3 barriers that the foreign providers have faced and continue to face, right? So I think, the landscape's littered with the carcasses of people that have tried. So it's a tough challenge.
Can I add one thing to that, Ron? And I agree with everything Robin said.
Yeah.
But it isn't just foreign cores, right? We've had some startups in the US, Silicon Valley, really smart people who say, hey, this would be really cool to get into this space. Yep. And, there was one where they evidently assumed every transaction that happened in the world was a card transaction. Well, guess what? ACH reconciliation, all the stuff to do with checks that Robin just alluded to, that's there. Reconciliation is hard when you have a variety of different payment streams coming in. And these people totally underestimated how difficult that stuff is. So it's not just the foreign cores. We've had some domestics that have really flamed out because this is hard. What we do is hard.
They want to, to Dave, to your point, they want to talk ISO 222 and real-time payments and all that kind of stuff. But you and I know if you're not doing ACH, you aren't part of this market, right? You still got to do it.
One thing that somebody had asked, I saw a chat thing come up, asked about definition of foreign cores. And just so everybody understands what we're talking about, foreign cores are like Temenos, Infosys. There's a number of cloud cores that have attempted to enter the market and have entered the market. But, it also leads to an interesting question. So what do these new cores and cloud cores do if it's so hard to penetrate the existing banking and credit union businesses? Where do they end up going? Is that the fintechs, the neobanks, the stuff like that? Is that the focus?
Well, I think, different ones have had different strategies, right? That have been, short in their offerings, right? One of the more infamous ones is what Oracle tried to do with iFlex and FlexQ, in that they brought the product here and they, failed miserably in 2 significant institutions to be able to meet those requirements that Dave was talking about, that I've talked about. And so they've shifted, right? They've shifted to using that product for specific functions like corporate, some corporate banking functions, or repurposing the core to do some other types of things for, US financial institutions. You look at other folks like Infosys, like Temenos, that have gone down the niche route, either in regulated financial institutions or in fintechs, where they've, chosen a niche to play in that, makes sense. The problem is that's not, it's tough to build a business on a series of one-offs. It's tough to build a business when everything looks different, right? So I know one of those providers has, 6 or 7 US implementations, but no one of them looks alike. right? So you look at the success of a Jack Henry over the years, whether it's with the Silver Lake, solutions or money or, CIF 2020 or Silver Lake, it's been because of consistency, of a lot of those components, that they've been able to build over time. And I think that's where you see them struggling as well, is having to find niche type plays, and nobody is really, being able to capitalize on the volume that's available out there in the marketplace.
I just want to follow up on that. Can I get your opinion on the different approaches that are being pursued by the current core providers to offer a next generation core solution? We heard Dave describe his perspective on how Jack Henry is approaching it. Robin, maybe can you give us a little bit of perspective?
Yeah, I mean, what we're very focused on is, as I said, the fintech space, right? Fintechs, non-bank lenders, people that are in some cases viewed as competitors to traditional banks, but in many cases are also partners with traditional banks. So we have a number of different customers that are working with sponsor banks, right? Where a sponsor bank is allowing them to use, their charter to basically, in the case of like a robo-advisor, and they're able to bring their own technology and bring their own secret sauce to that. And we play a role in that, right? We play that core, deposit and lending ledger. So those are the types of opportunities that we're looking for, that, in some cases, either, we're a more open solution, or we're a solution for, companies that want to build versus buy a lot of the componentry. And so we fit very well into that because, we've got, an open API library, that's available publicly, much as Dave described, Jack Henry's doing, with their transformation efforts. So that's really the market we're approaching, is folks that need that kind of flexibility, want to get, fast speed to market, standing up a small business lending offering in, 2 to 3 months, greenfield startup type opportunities in the fintech space. So a very different market than, traditional regulated financial institutions.
It's interesting. I want to go to Ben to get the other side of the coin from a financial institution perspective. Can you give us a perspective on kind of the different approaches that you're seeing out there now by the core providers, the new and the foreign and the existing, to offer next generation core solution?
Yeah, I think a lot of them are like Sven mentioned, are targeting, fintech or special niches, but not being a full core offering. I think what's really challenging for them specifically, as being new entrants, is, to move off a core system takes a massive project and conversion that stops a lot of progress in, the financial institution for a year plus, prepping for it, doing it. And even if it goes well, you're still losing a lot of time that you could be doing other things. And I think that's a hard pill for some institutions to do all at once. And if you're a new entrant into this market, you have to have a proven solution. And I think they're not proving themselves to be that full offering. And, the ones we've looked at, they look great on the surface, and they can do some things. They can provide some benefits, that may not exist in our current, situation. But at the same time, they don't have a full offering. They're not going to be replaced, and they're going to have those things that come up that we're not going to realize until it's too late. Where they didn't think about checks, or they do checks differently, or something like that that doesn't come every day. I think that's where the real opportunity is for the existing cores and the established cores to demonstrate that they can, offer the things that are missing and partner with what they can, and maybe even partner with some of these cores to offer the solutions. Jack Henry's doing a lot of stuff with open banking and moving to the cloud and things like that. And that's really appealing to what we're trying to do, and helping work with the regulators to understand that the cloud are just servers that are just not in the building of the institution anymore. It's still all the same stuff. The data isn't any exposed any more differently. In some cases, it's better off in these different cloud providers because the amount of security and data engineers and all that they've put in to build these systems over time. But yeah, I think the biggest thing, and I think the most appealing thing that we see from these kind of challenger cores, if you will, they offer maybe a really good, small business opportunity. So I think a lot of people in community banks, credit unions, when PPP came about, we scrambled at how do we get a piece of this? We've not really done much with commercial, and who do we look to in that moment? I think some people chose to look at, some of these new cores, or maybe that they are, parading as more like a commercial lending solution or origination system that, their hope is to ultimately end up as a core. There's some fintechs that, offer kind of core solutions, but once you dig under the surface, they're more, you have to assemble them and put them together. And again, they serve a narrow set of products and services where, the established players are serving a wider net. So yeah, I think from our perspective, in order for us to move and take a risk on one of these other cores, it would, as our full solution, I don't think we would ever be willing to do that upfront, but we would be willing to try, pieces of it and see, is that really a path to continue down? But we're going to lose a year or two to actually make a conversion. I think we're all in an inflection point where we're trying to move so fast that no one has time to do that anymore.
Okay. You kind of opened up a door to another set of questions, but focusing on the fact that there are a small number of financial institutions that have just recently adopted new cloud cores, for example, Chase and Arvest. Is this indicative of a change, do you think, in the bank and credit union towards core banking solutions, and why? And I'm going to go to Ben, to just sort of continue on that topic.
Yep, absolutely. So, I think people are open to exploring. I think the pandemic really opened everyone's eyes to maybe taking risks that were not there and investing, and understanding that you need to learn from these experiences, and they may not all pay out. And I think there is a huge reward if it does pay off, right? So if you can figure it out, you can move and it works. I think especially the larger institutions are realizing that if they want to keep moving and competing and embracing fintech a little bit more, this is some of what they need to do to get there. I know they have a lot of different disparate systems, that they need to weave together to make work. And sometimes the largest institutions have more than one core, doing different functions. So I think we're all interested in seeing what we can do in the cloud. And, I think these get a lot of press because that's something new and different, but, probably less that's happening is maybe some of the core work that's being done internally. Like, we formed our own task force to figure out how do we get all our stuff into the cloud. So how do we modernize our own tech stack? That may be, looking at other solutions, but at the same time, we're also going to want to work with our core provider, in our case, Jack Henry, to see what can we do and how can they help us? And they're already heading down this path as well. So luckily in our case, that's going to align. But if you're on a core that's not doing those things, you may actually start to be tempted to move out of that system. And there may be a catalyst if you can't do all these things that people are doing with fintechs. And maybe that's really the catalyst. And when we say fintech, all these companies are fintechs, the core is everyone. So maybe like really focus on what startups are doing and how do you compete with a Chime and a Coinbase and a Robinhood and do some of that stuff and offer things like, fractional share investing, getting your paycheck early, and all these things that are getting a lot of press in the Gen Z group and millennial group, look and see and say, hey, I don't even need a financial institution anymore. I can just go use Venmo, Cash App to send money around. So why do I need any of this? So I think, we're also seeing that. And do you offer a niche offering to capture that? Or do you grow that into your core business? I think is really, what's trying to be figured out, especially in some of those, larger institutions.
And just a clarity, I think I mentioned about Chase and Arvest, the company that is the core that is involved with that in both cases happens to be Thought Machines. And it was interesting that Thought Machines were supported by two large development integration technology companies, IBM and Accenture. And so it seems like the new guys need to have some very big, muscle along with them in order to be able to make that happen. Do you think that's correct, or am I mistaking it?
No, I think it's a huge thing to try to compete in and swap out. It's like doing brain surgery in a way. You got to be very careful. You got to have a lot of sophistication to it. So, lots of money, lots of thought and work that goes into that. So yeah, I would agree. It is, yeah.
Well, and if I can, I'd like to tag into that one because, well, first off, you used the word adopted when you were describing what Chase and Arvest are doing. So they've announced, but they, the announcement was 5 or 6 years from today before we'll see anything. So, we should be clear about that. There's nothing processing in the public cloud on Thought Machine today. But to the point Ben was just making, Yeah, it's a lot of money and it's a lot of time. And we know because we've been working on this already. Well, we've had programmers working on this for 2 years. We've been, strategically, been working on it for 5 years. And the announcement that we've made is, it'll be 3 to 5 years before we have full banks, credit unions in full production on the public cloud. But that timing is okay as far as I'm concerned. There's a lot of work to do. We're rewriting everything essentially to put everything on the public cloud. But that timing's okay because most regulators today don't want you on the public cloud. They think that's risky still. And so, in fact, I did a podcast earlier today with Joanne Barefoot, and it was essentially for the regulatory environment regarding what should they do to get ready to regulate in this environment because they're not ready, right? There's a lot of training that needs to happen, a lot of comfort that needs to come in the regulatory agencies before we can say, okay, we're running full banks in full production on the public cloud. But getting there, I think, is imperative. I think that bankers are all going to want to be there in the future, taking advantage of the development environment that you have in the public cloud, all the cool design tools that you have, the security environment that you have, the ability to burst for processing, the DevOps environment where you can do rapid release. I mean, all the things, the world that Robin's living in today, all that stuff is where we all want to get to as far as providing a public cloud solution, but it needs to be a complete solution, right? It can't just be a sliver of what the bank or credit union wants to do. It needs to be a complete solution, and that's where we're really trying to be innovative at Jack Henry.
Thanks.
I want to come over, if you don't mind, I'd like to comment on what Dave and Ben both just said, because I think, you take the Arvest and JP Morgan Chase situation, I don't want to offend anybody, right? But when I look at, I've spent a significant portion of my career talking with very large tier 1 financial institutions, right? And one of my mantras has been, they've got one of everything sitting on the shelf. I mean, there's probably some of us that remember Project Rainbow at one large New York-based institution, right? Which was a huge, project to implement a next generation core for this very large bank. And it never saw the light of day. As Dave says, right? I think a lot of the large banks that have made these bets, it's a rounding error for them in terms of the investments they're making to test and learn on a public cloud type solution. What I'm more interested in is to see, does an Arvest, does a Mascoma, do some of these other smaller community banks, can they deliver a solution under budget, on time, that's a complete solution like Dave described, right? That incorporates all the things that they need to do to run basically a community bank in Northwest Arkansas, on that kind of platform. And that's a big part of it, right? Is dividing that between banks that have to operate versus banks that can do science projects, right? And can afford to do science projects. And I think that's a big part of what we have to look at over the next 5 to 10 years is how that evolves. Okay. And then the second piece I would add to that is that as they take on those science projects, can those companies that are behind those efforts, can they scale? Right. I mean, when you've got a company and I know my friend Dave would say this, right? When you've got a company that's supporting a private cloud offering, a public cloud offering, and an on-premise offering, supporting 3 different code bases deployed 3 different ways, how scalable is that? How sustainable is that? Okay. Which is why we've focused on all 230 of our clients run the same code base on the public cloud, right? They get a release every Tuesday. Right. And it's consistently across the board the same. Right. And that's our operating model. And it has cost us business at times, right? Because that's going to be the way we deliver our product. Okay. But those are the kinds of things that I think you have to look at when you're looking at some of the current, quote unquote, true cloud providers is, look at deeper into their business models and do they really survive the test of time?
Thank you, Robin. I actually think you served something up that I wanted to go back to Ben on. And I saw Ben nodding his head about, there's a lot to do when you're dealing with a new core. And, it's something that clearly from a financial institution perspective has to be thought about, studied, figured out. Ben, your view?
Yeah, no, absolutely. I think Robin made a great point about there are going to be banks that can experiment. There are going to be banks that have to operate. And I think if you're trying to swap out your operating model for a new core, there's got to be some proof in the pudding before you go down that route. If you're an operating institution that's going to rely on its entire business on that offering, right? So that cannot fail. If that fails, your business is done. right? So, you make a mistake, you're the CEO that brings in, you're the CIO, you're fired, you're gone. Like that's not going to go well if that happens. So I think that's also at play as well. But you can do a smaller offering, right? So do you start a separate brand? Do you start a separate institution? Do you have a small offering to 10,000 people versus, trying to run, the challenger core onto, all for us 300,000 members, right? So we wouldn't do that. If we were going to try something, we would try something else. And, but really, we've also taken the approach too that, with our core vendors, our core banking provider as well, is that we're only as strong as they are. So we want to be a good partner. We want to help them innovate. We want to help them grow. We want to give them feedback and let them know what we need. So when we're ready for something 5 years down the road, they've been working on it for 5, 6, 7 years, and that's reasonable. I think this stuff is a lot of work and you have to get it right. And some of the stuff that Robin's talking about, like moving towards, the no releases and stuff, that sounds appealing, but at the same time, the regulators need to be involved and they have to, agree that, yes, if we move this direction, by the time we get there, they're on board as well. So I think a lot of this right now stays in, experiment world, and the people that can experiment are going to be able to start to reap the rewards of perhaps some of these things or help prove them out. I think from the company perspective too, if you're only allowed to be an experiment, and you have to invest so much upfront, it's going to be really challenging for you as the core to actually get enough business to keep going. So again, you gotta have a lot of money behind these. They're going to take a long time to take and get traction. And some of the challengers out there have picked up 1 or 2 institutions, and they say they're going to deliver on them, and they haven't yet. And I think there's been a lot more focus on those niche offerings still from these core challengers, and that's again to the experimental side versus the operating. And I think that's probably a really good distinction for how everyone will probably see this moving forward.
Hey, Ron,
Thank
can I
you.
pick up on something Ben said and just make a quick
Please.
pitch here? And this
Yep.
would be for the whole audience. I don't care who your core provider is. Well, I care, but for purpose of this discussion, I guess I don't care. So Ben made a point there about engaging with your core provider in that partnership approach, challenging each other, working together. So Ben and Ben's CEO April, they're very progressive in the way they think about working with us as a partner, and we love that. And so my pitch, my wish would be that every institution would take that approach where you're challenging your provider, where you're working collaboratively with them, not just complaining at them, but trying to work through ideas and what does the future look like and all that kind of stuff. We love working with customers like Ben and April because they challenge us and we work together to solve problems. And the customers who don't engage are the ones I worry about. As the CEO of our company, we want to be engaged with our customers. We want to talk about what the future looks like. We want to help them solve problems. And so that would be my pitch to everybody that's listening is whoever your provider is, I would just hope that you're kind of challenging them and working with them the way Ben just described, because that is the healthiest way to do this as far as I'm concerned, sitting in my seat anyway.
I think that's a great bit of advice. And I think it's something that Robin, I'm seeing him shake his head also, agreeing that it makes tons of sense to have that kind of relationship between client and core. I think more of that, the better. We have so many questions that we've thought about, I've come up with, you guys have mentioned, but there's just not enough time to go into everything. So I'm going to go into the last question from my perspective, and then ask, I think, Dave True to help me with the questions that have been coming in from our members. So my last question, and it's a big one, what do you see the trend in cores coming in the next 10 years, 20 years? And I think looking out into the distance is important because there are going to be changes. We're not going to have all the right answers today, but there's going to be things that are happening. Some of the cores are going to remain the way they are for years to come, I think. But I also think that there are going to be changes. So, let's start with Dave. What's your view of the trend in cores over the next 10, 20, whatever you want to talk about?
So I can't speak for what anybody else is going to do. I can just speak what we're going to do. And our approach is, as I described earlier, we feel strongly that we need to redefine what core is. A few years from now, 10 years from now, our goal is to not use the term core, because we will have unbundled all those things that today we think about as core. We think the most effective model for our customers going forward, whether they're large regional banks or smaller banks or credit unions, will be to have that flexibility to choose components that they want to utilize, coupled with what are we supposed to say, Ben? We're not calling them fintechs anymore. We're calling them startups.
Well, I
Yeah,
think, yeah, are you working with startups or are you working with fintechs? Yeah, I
There you
think
go.
there's mature fintechs and startups.
Yeah. So startups or even mature companies that are only offering a niche solution. We think the future is everything's sitting on the public cloud. The customer has, the bank or credit union has the option to choose which functions they want from us as a provider, which functions they want from somebody else. They should be easy to integrate through an API layer. And all supported in a public cloud deployment. And so that's what the future looks like for us. And that's not just 10 years down the road. We think that's 10, 20 years down the road. That's the future as far as we're concerned.
Super, thank you. And Robin, what about you? How do you see things evolving over the next 10, 20 plus years?
Gosh, get out the crystal ball, right? I mean,
Yeah,
Alexander Graham Bell was granted the patent on the telephone in 1876. The iPhone was released in 2007. So if you think about the iPhone today and what all the iPhone is capable of 15 years after its introduction, right? And so you think about cloud core banking and whether it's going down the path that Dave and the folks at Jack are taking, or the other core providers are taking, everybody's moving in that direction. And so, you think about just the advances from a technology perspective that are going to enable a totally different view of, what we do from a financial services provider perspective. So it's not a core banking perspective anymore, because our customers don't think that way. They don't think about the core banking solution. They think about the services that you provide them as a financial institution, and how can they get it better, faster, cheaper, and do more than what they're doing today. So whether it's the marketplaces that a bank, you think about 20 years ago, banks were trying marketplaces, right? But the technology didn't support it. Bank of America tried a small business banking solution that incorporated everything from tax accounting to payroll to forms to everything that you need to run your small business. Well, today the technology is there to enable all of that. And I think that's our challenge as core providers going forward, is constantly looking at it inside out, outside in, right? In terms of what is the consumer demanding, whether it's a business or a retail consumer, and then providing the technology backbone that they need to support that. And so I think it's a wide open playing field and lots of room for lots of people, to do a lot of things and, to make some mistakes and also, have some great successes.
super. And Ben, I'm going to ask you to wrap up. What do you prognosticate in the future? What's going to happen?
Yeah, I think I'm going to take two angles here. The first, I was going to tie it back to what the kind of the iPhone or smartphones in general have kind of revolutionized how we look at things. Apple took the approach and they advanced their hardware so quickly that it took all the developers years to catch up to what they were able to produce. And it takes time to write software, and it takes time to write good software. In our case, the core systems are building the platforms that allow the rest of the ecosystem to build the future, and it's going to take time, and they're going to have to learn from each other and partner. And the cores are going to have to transform themselves and being that enabler and being the platform in the marketplace where everyone wants to play and be a part of, and really use that as the kind of the catalyst to move everything forward. And they're in a great position to do that with some of the moves they're making. And there will always be a need, I think, for some of the legacy stuff out there. There's stuff that runs forever because there are institutions that are going to choose to operate that way. And I think that's going to make it hard to move some things forward. But at some point, maybe some companies make decisions that, you can't keep running your iPhone 4. You can have the apps and it can work as long as the battery doesn't die, but eventually you have to upgrade. The other thing I want to mention, so there's a lot of stuff happening with embedded finance. And if you look at the WeChat and the WeBank and Alipay and everything that's happening in the Asian markets, where they're forever been 10 plus years ahead of where we end up in the North American banking system, and they really are making these super apps where all the stuff, banking's embedded into their lives and into their digital experiences, their experiences with everything they interact with. So what happens when banks, credit unions, financial institutions more fade into the background of these transactions? Where does the core fit into that if it's not always the financial institution that the customer member has the relationship with? Is it really their ride sharing app or their food delivery service or whatever the experience that they're trying to engage with is? How do you fit in the banking system and then the cores and everything that we know today? How does that change if we're all interacting with these things in a way where payments and things are kind of in the background?
Do you think, I'm just going to throw it to all three of you guys. Do you think the industry is going to go towards thin cloud cores? As Dave is talking about their menu of cloud services that can be pulled together, a thick cloud, implementation. Where are things going, or is it anywhere? It's all three.
Yeah, I think it has to be a hybrid, but
Yeah, I think the days of big monolith type of banking applications is over. I think it's going to be more like an app store type scenario, where our customers want the ability to have those choices and have that flexibility, to serve their customers. And what the core then represents, what the core ledger represents, is it really represents that repository of data, that system of truth that is the fuel for a lot of those engines, right? I used to use the joke that if I put somebody in front of a platform automation, so if I put my 6-year-old in front of a platform automation solution, they'd think they were looking at a core banking system, right? But really and truthfully, they're just looking at a user interface. The data, the fuel that front end system needs is resident in the core, right? And there's so much, data that we have available for those applications in the app store, so to speak, and that's where I think you'll see the intersection, but it won't be big monolith cores anymore.
The key to all that, as far as I'm concerned, and clearly my view lines up with what Robin just said, because that's exactly what we're doing. The key from our perspective is we have to ensure that as we do this, we are creating technology that does not require the bank to go hire programmers. Right, most banks today do not have programmers on staff. None of this can require the bank to get more technical than they already are. If they have programmers, that's great, but we can't build something that requires the bank or credit union to go out and hire a bunch of programmers to make it work. It's got to fit together like building blocks, but you choose which blocks you want to put together and how you want to put them together.
Thank you. I've been bad because I've extended over what time I was supposed to use for these questions that we had, but several came in. I think maybe one or two of them we can handle. I'm going to go to David True, who's going to pull up whatever. I think there's 11 or 12 things down there. Dave, could you read off one or two questions?
Yeah, happy to do so. So there's one from Dave Garbino, and his question goes, how are the new core solutions improving security and identity, particularly given the future threat of quantum computing powered nation state attacks? That's kind of a mouthful, a lot of things going on in there, but really the overarching theme is that security. How is that being addressed? Because vulnerability to such attacks is only going to get greater.
Would one of you guys like to try to pick that one up?
So I'll start with that. So that is
Sure.
a key component of the strategy as far as we're concerned. So we take advantage of the security tools that are available to us as a public cloud, on the public cloud, through the public cloud providers. But then, all the movement that's happening around digital identity today and ensuring security in that regard, this is an evolving field. And so much of our effort is focused in this area and making sure that the solutions that we're providing on the public cloud are using all the latest technology around security.
Yeah, and from a Mambu perspective, it's the only world we live in, right? So we have 230 customers running in the public cloud today, and it's a double-edged sword, because the public cloud opens up so many opportunities for both sides, for the bad guys and the good guys. And so, a significant portion of the development work that we're involved with, it surrounds that topic, right? Whether it's the SolarWinds experience from a few months ago, it's a daily reminder for us that, we're holding that precious data that those institutions have in the public cloud. And we stand in front of the public cloud provider to assure, all of our service level agreements and RTO, RPO, and all those types of things. So it's probably the number one or two thing that we deal with on a day-to-day basis in terms of looking at our development effort, looking at all of the components that we need to have in place to ensure that security, regardless of where the attack comes from.
Super. David, I wanted to ask you, was there any other questions that you thought we should throw in now? Because we're right at 7 o'clock.
Well, I think given the time, it's probably a good idea to go into the breakout rooms, because that way the individuals can ask the questions of the people directly.
Okay, sure. What I wanted to do, I'm going to go over to Michael Flores to do the next part of it. I just wanted to thank the panel for getting together. I'm not sure I'm going to have a chance to do it with the three of you together, but thank you for your time. Thank you for your insights and perspective. I thought it was a great session and a lot of back and forth, give and take. With that being said, I'm going to go to Michael, and then we're going to break out, and I'm going to encourage everybody to stick around for the breakout sessions. It's probably just as good, if not better, because you get to speak to some of these guys one-on-one. Michael?
Thank you, Ron. I appreciate it. And Dave and Ben and Robin, this is an excellent discussion from somebody who in the 80s and 90s did IT strategies and vendor selections with the old core processing providers. One of the common issues that always came up, and one of the things the bankers wanted to correct, was time the market for a product and a service, as well as the customer, what we now term customer experience, what back then was just better customer service. And so this seems to me the ideal strategy and road that you guys are taking to make this thing happen and to provide that quicker time to market and flexibility, particularly for the smaller institutions that don't have the skill sets internally to make this happen. So again, thank you. And to all the participants, this was, thank you for joining us. We had a great group here. I just want to mention coming up, our